Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
Right, 1400 hours this Wednesday, the 3rd of December. A very good afternoon to you and welcome to Nedbank Business Watch. It's quite interesting, not see the third day of the week on the 3rd. How interesting is that?
And we're drawing closer, or should I say the countdown has begun to the 19th year?
Oh yeah, by the way, we did highlight that earlier this year. 19th of December is an important day. Someone was born. A special person was born on the 19th December. I'm not too sure they want us to tell them who they are because they are private people.
They should know already. Yeah. If they watch the show, they should know.
Our loyal viewers know who's being born on the 19th of December. It's in a couple of days. And yeah, looking forward to that day. And your slice of cake, I think they promised you a piece of cake.
Oh. Here I am sending it out.
Cat is out the bag. My birthday on the 19th of December. But yeah, the show's not about me. Welcome to the program. We will be giving you the latest in what is happening in the business landscape of the Kingdom of Eswatini. And of course, my name is Sifiso Numalo. Happy to co-host with Notsidas Tole.
On the program today, we'll zone in on the latest development in Eswatini's energy landscape. That is the granting of a 20-year coal mining license to the Eswatini Electricity Company. The license has, of course, been hailed as a transformative step towards energy independence and industrial growth. But it comes at a time when the EEC's financial health is slightly under pressure. Just this week, the company recorded a net loss of 80 million emalangeni and an operating loss of 247 million emalangeni. Its cash reserves have shrunk drastically from 131 million emalangeni to just 28 million emalangeni, with high-cost power imports and regional drought straining both operations and sustainability. However, we're going to, as we celebrate the promise of locally mined coal and future generation, what about the economic viability, financial risk, and long-term impact of this project? In-house economist Anele Sibia will break it down for us here on the show. And then also we'll take you back to a conversation we had with ABF specialist at Nedbank, Bongosi Kumalo, on flexible financing solutions offered by your bank of choice.
And of course, as we continue to speak to the people from Nedbank Eswatini, we will welcome the Treasury Department as we look at today's numbers. Risk assets globally showing signs of a rebound after a rough start to the month. In the U.S., there's rising optimism that Federal Reserve, that is the Fed, may cut interest rates very, very soon. And many analysts now price in a high probability of a rate cut in December. With bond yields stabilizing and safe haven assets like cryptos and bonds pausing or rebounding, investors seem to be rotating back into equities. And that said, markets remain vigilant. And then when we look at global growth, there's uncertainty there, especially in Asia, where there's currency fluctuations and interest rate moves by major central banks that are creating a mixed, cautious vibe. And the takeaway from all of this is that on the global front, there's a cautious risk on. It is a tilt that is forming, and if the Fed delivers a rate cut and then an economic data stays firm, equities could keep rallying, but volatility remains in play, especially around macro data and interest rates shifts. We will be welcoming the Nedbank Treasury Department to zero in on these numbers and really help see how the implications of all these developments affect to the Kingdom of Eswatini. Otherwise, welcome to the program. It's 3 minutes after 2. You're watching Nedbank Business Watch.
Our business stories in a bit.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. Let's have a look now at our business update.
Our first story, processes leading to the establishment of the African Monetary Institute, which will lead to the formation of the African Central Bank, are reaching an advanced stage. Now, this has been shared by the Governor of the Central Bank of Eswatini, Dr. Philip Nisi, after attending the Association of African Central Banks meeting in Cameroon last week. Well, Dr. Nisi said the governor stressed that they are in favor of the establishment of African Monetary Institute that is starting with a small number of staff, and that they referred secondments from member central banks since they have the requisite capacity. Also established in the meeting was an ambitious plan to have the African Monetary Institute launched in September next year. Well, the governor said that since Nigeria had offered and was accepted by the summit to host the African Central Bank, the African Monetary Institute would then be based in Abuja and would start operations immediately after the launch. As we celebrate the promise of locally mined coal and future power generation, what about the economic viability? Well, those are some of the assertions made by the Governor of the Central Bank, and that is the update on the establishment of the African Central Bank.
And in this next story, businesses, whether formal or informal, have been urged to register on the Citizen Economic Empowerment Registry platform, which is designed to give Eswatini small businesses visibility, credibility, and access to opportunities without forcing formalization or imposing compliance burdens. The Director of Small and Medium Enterprises, Nduleki Dlamini, explains more about the platform.
Basically, this is a free platform whereby we're working with Datamatics and also UNDP, where we will be going countrywide to encourage businesses to register in this platform. And so basically what we aim to achieve is that all of the businesses that are trading in the country will have an opportunity that customers will be able to go to the platform and also see what they offer. And at the same time, they can contact them directly and start engaging with them. As government, we want to also structure our programs basing on that platform so that we know where our businesses and what sort of support do they need as we continue to structure our program. So basically, this is a platform that aims to reach out to all the businesses, whether formal or informal. They need to register so that we can assist them with all support that government provides for business development and promotion. We'll be going out to the regions. We've already done Hoho, and the next one is in Nhlangano and Big Bend, whereby we will be having our awareness and sensitization sessions where businesses will be able to register during those sessions. So they should look out on the dates where we'll be going to Nhlangano. We'll be announcing those dates shortly. And we believe that also the business associations will assist us in terms of ensuring and encouraging our businesses to come forward and register on this platform, because you can do it also on your phone. You don't need to have a laptop or any other gadget, but even the phone, your phone can be able to register you on that system. Registration can be done through a QR code that you can use and scan it. Then after that, you use your phone to upload your information, or you can go to a website, www.cec-msme.com.
And you're up to date with some of the latest in business this afternoon.
We go for a net break now. We'll be back shortly and the show continues. We have more for you.
Welcome back. You are still watching Nedbank Business Watch. On to this now. Eswatini Electricity Company has scored a 20-year coal mining license for the Lupugu mine, a strategic move aimed at beefing up the country's energy security and powering future generation capacity. This license, covering a vast coal-rich area, marks a major step towards reducing Eswatini's heavy reliance on electricity imports and strengthening local supply. Energy stability is critical for attracting high-value investors, and this development could play a significant role in boosting confidence in the country's long-term power outlook. Just how important is this move in securing Eswatini's energy future? To unpack this, we're now joined by our in-house economist, Anele Sibia, coming to us virtually. Good afternoon to you, Mr. Sibia. Thank you so much for your time. How significant is this 20-year coal mining license when it comes to strengthening Eswatini's energy security in the long term, of course? Mr. Sibia, care to activate your audio so that we're able to converse?
Hey, good afternoon, Jonas. Good afternoon to the viewer. So when you talk energy sufficiency in terms of Eswatini, it's quite a critical enabler to our economic growth, and also it is quite critical that we're able to generate a huge proportion of our energy needs and sustain them with domestic power productions. And when you look at the contract that we are talking about here, it's a coal mining contract, one of that shows that the country is in a way preparing towards establishing a thermal power station for energy generation in the kingdom. And I think that is what we need as an economy to ensure that we are actually self-sufficient in terms of our energy needs.
Right. Your assessments or perhaps take on the timing of this license. Is it economically wise, for the EEC to expand into mining, especially, just this week they did report net losses here and there, but what do you make of that?
So the way I look at it, Notsile, I think of it from an integration perspective where EEC, the way I look at it is that EEC is a company that now wants to venture into thermal power production in terms of diversifying our energy portfolio. So with the mining contract per se, you wouldn't expect EEC just to mine so that they are in the mining space. I think it's part of a longer term energy generation plan rather than it is a means to an end on itself.
Right. And do you believe this project can actually, realistically deliver on, the promises of job creation and industrial expansion?
Definitely not, because I think it depends on the long-term goal. If the goal in the long term is to produce thermal power utilizing the coal. So what you're in essence doing is you've integrated the chain such that EEC is both the extractor and both the customer, and just different units within the entity. So you do expect to see those sustainable jobs and that industrialization that's going to come through, having a country that is well lit and has a sustainable power source throughout the year tends to attract business, and it will actually have quite a multiple ripple effects on the growth and development of the kingdom.
Right. So the goal here, at least the minister's projection is that Eswatini could generate up to 1,500 megawatts from locally mined coal. Quite the ambition, but considering, financial and technical limitations, how feasible is this?
It's quite feasible, Notsile, because in terms of skills, the skills we do not have in the kingdom are skills we can import from South Africa. South Africa has quite a number of thermal power stations. Botswana has quite a number of thermal power stations, and Mozambique as well has quite a number of thermal power stations. So in terms of that capacity, I think it's a skill that's transferable, which we can actually teach to our existing engineers. Where I see a huge bottleneck is actually with financing the construction of that thermal power station. Because if you look at the way a number of countries in Africa have been able to finance thermal power stations has been through, looking east, those funding from China, for example. That's what Botswana has used. It's what Zambia used as well. And I think it's what Mozambique used for the most part on their energy programs. And then now when you look west towards, those multilateral institutions such as the World Bank, the IMF, we see that there's a push towards more green energy within that space. So I think that's where we need to now start balancing as a country and see where we can find a friendly financier who still believes in the fact that fossils are the way to go in order to power an economy, while we are allowing for for the renewables to grow in the space. Noted, we do note that renewables, the cost of renewables have come down drastically over the years, but it still remains a touch bit high, and the maintenance costs. So I think it's more the balancing act. It's more the financing that I worry about, where we're going to raise the money to build a thermal power station in this day and age.
Because you do say financing could actually be a concern. So what mistakes do you think the government or the EC actually would you propose that they avoid? If the hopes, with the hopes that we could turn this project into a profitable venture other than, well, a financial burden?
Thank you, Notsile. I think for me, the one thing that we need to do is, think around sustainable financing mechanisms to ensure that we are not looking at multilateral institutions and bilateral institutions only, but find ways of including the private sector in the process, find ways of looking, for non-sovereign debt, just find those PPPs, make it work, find a financing modality that can make the power station work, that can develop the power station. And then in terms of what we need to understand in terms of a financial burden overall is the maintenance cost. Most African countries have had actually inherited quite sustainable power systems, but the issue with maintenance now, then that's where it becomes a problem. We build it, we must be in a position to maintain it such that in the long run we are able to reap those economies of scale. So my thinking up front would be avoid the cost overruns in the constructions so that eventually we can begin to see economies of scale kicking in, say in the third or fourth year of the project operation, once you've started recouping a bit of that money that should have invested into that. So we kind of need to ensure that we keep the cost as minimum as possible, and we ensure that we come up with a maintenance plan and ensure that you involve communities so that you get a better buy-in.
This license agreement should be music to the ears of especially consumers. So how do you think local mining, coal mining specifically, could improve the reliability and affordability of power generation?
Now, in terms of it being music to the ear of consumers, we are not sure, Notsile, because like I said, there are issues to do with the financing and also the issue to do with renewables and renewable energy. Right now, we are seeing a situation where the world is moving away from fossils towards cleaner energies at that point. But overall, in the long run, if we can get the thermal power station up and running, I'm sure we could drastically reduce our imports from South Africa, if not eliminating them entirely. We could learn from countries like Botswana. I mean, they developed one thermal power station, I think 5 years ago, and they were able to get to a point where they now have excess, which they can actually supply to South Africa instead of importing from South Africa. So we just need to borrow from that model and build something similar for almost the similar cost, and then we'll be in a position to get to that point where we have relatively low tariffs as an economy. But we do have to then, as well as a country, balance our our environmental footprint with our energy generating capacity. But overall, I say it is a good initiative. It will work well for the consumers. We should begin to see the price of our electricity going down, if not staying at the same level, if we can get this project on the ground, off the ground.
that would be the best thing for many. But in terms of investor confidence, how could a more stable energy supply influence foreign direct investment flows into the kingdom?
So energy is a backbone of the economy, Notsile. Most production processes require electricity. Even in the services space, you need electricity to power your servers. And when we look at artificial intelligence overall as a new concept, we can see that it's quite heavy on the energy requirements. So right now, if we are to exist and live in this current age as an economy, we do need to have the power to support energy industry as a backbone of that infrastructure. And also it speaks to issues of inclusive growth and inclusive development, where once we have our people powered and they have lights for studying and doing every other thing, it tends to improve the quality of life and therefore the developmental outcomes of our households. But then the caveat to that, Notsile, is the fact that we are thinking of going back to fossils when the entire world is now greening. So there is going to be that issue where you would expect to attract investors into the country. But what UNISA is going to do is there are those investors that are green investors, those ones that are fair trade are registered, where you would have to show cause that we are reducing our environmental impact footprint. So we do urge that for us to gain the full multiplier impact, we need not to then forget about the green energy drive that the government of the Kingdom of Eswatini has been pushing, while we also improving our overall generation through thermal, and also be building, those hydropower stations, harvesting the sun, harvesting the wind where possible, so that we're able to appeal to all investor types and meet all investor requirements, so that if you are looking for a green energy space, we can offer that. If you are just looking for energy, we can offer that.
Should this succeed, fingers crossed that it does, in the 20 years that we're talking about, what kind of high-value industries are most likely to be attracted by the promise of long-term energy stability, actually?
So you should actually expect to see big manufacturing coming into the kingdom. You should actually also be in a position to see those data centers, those AI data centers, depending on how much that capacity will be. But we do know that within that artificial intelligence landscape, those companies are always looking for spaces where there is excess energy supply, so that they can keep and cool these servers and all of these things. So we know that AI requires quite a lot of energy to burn for it to produce the output that we are looking for. So if we can position ourselves as a country that way, so we should also be in a position to attract such. And then you're also going to see the tech space also being filled up, because you do expect, a production process that would not see those disruptions. And also in terms of food processing, we do expect those to grow as well, as we have this consistent energy supply.
As we conclude, this should be a turning point towards energy independence. But as an economist, what key indicators perhaps will you be watching closely to determine if this project is really delivering on its energy and economic promises?
For me, it would be the cost per unit, the cost of output, the cost of sales. We don't want to get to a point where we have energy independence, but the cost of doing that are very high. So the way the utilities company has to structure this is in a way that we get to a point where we have a sustainable and efficient energy supply. So we are going to be looking at the relative price of per unit in the kingdom compared to the region, because that is what now gives us a competitive advantage. It's not just the thing of having the power. You need to have the power in a way that it is affordable, and then you become this ideal investor destination because you are producing the power and it's relatively cheaper and it's sustainable.
Mr. Sibiya, thank you very much for your insights. That was in-house economist Anele Sibiya talking to us about the positives of the Eswatini electricity company being granted a 20-year coal mining license for the Lubulunga mine. This is Nedbank Business Watch. The show continues after this. Welcome back. You are still watching Nedbank Business Watch. In our conversation with Nedbank today, we are discussing flexible financing with the Bonginkosi Kumalo, who is the ABF specialist at Nedbank. A very good afternoon to you, and thank you for joining us in our studios this afternoon. Flexible financing, why is this a solution that matters now?
Thank you so much, Natsila, for having me here. The flexible financial solution, as a bank, we have tried to look into the economy part. So we have then tried to craft a solution that will allow all people hoping to own vehicles to be able to afford cars despite the pinch of the economy. So yeah, actually we have brought quite a number of solutions in that regard.
And the flexible financing, perhaps would you like to define it for us a little bit? What does it have to offer?
No, thank you, Natsila. Yeah. Actually, we have noted as a bank that actually owning a car is a major milestone for many individuals and the families. So we've tried looking to the economy, we've tried to craft some options that will be affordable to the clients so that owning a car, it shouldn't come as a burden. So we have looked into solutions to allow clients to be able to own cars, especially nowadays things have changed. Owning a car is not like in the other years. It's actually, we have since discovered it's actually it's no longer actually a want. So it's a need. So as a bank, that is the part that we have tried to to solution our clients.
Okay. Yeah. This financing solution, is it only for your clients, for specifically Nedbank clients, or what if I am not a Nedbank client, I don't bank with Nedbank, but perhaps would like to be afforded the same benefit?
It's okay, actually, vehicle financing, it's not only for our Nedbank clients.
Okay.
However, we do encourage that you join Nedbank, especially so that you can have the full package in terms of the discounts. So otherwise, in a nutshell, I'm saying Nedbank can finance. At Nedbank, we finance Nedbank clients and also non-Nedbank clients.
Okay. Yeah. Under this flexible financing solution, I understand that it covers both new and old cars rather. Can you explain the T's and C's there, just the terms and conditions that apply, whether I want to buy a brand new car or I want to probably buy a second-hand car or a pre-owned car?
Thank you. Thank you, Natsila, again. Okay. Yes, as a bank, yes, we do encourage buying of brand new cars. Remember, this is an asset. So the trick there, actually, in terms of the difference between the new and the older car, Yes, we do. We do buy second-hand cars, but then in terms of in terms of the tricks, especially for new cars, our limit is 84 months, which is 7 years.
Okay.
New cars, we can go up to maximum of 6 years, depending on the age of the car.
All right.
Yeah.
With the offerings, what I understand is with the new vehicles, there is a 0% deposit with a repayment of 84 months, and with used vehicles there is a minimum deposit of 5% with terms of up to 72 months. Can you explain on how the 0% deposit option works for new vehicles, just practically?
Thank you, Nancy. Yeah. Nancy, actually, for a brand new car, remember the car is brand new, like you're saying it, so there are no defects in the car. So that's why we give the full tenor, the tenor we are offering, the 84 months. Yeah, so in terms of the used car, normally there are defects, so that's why the tenor especially will be reduced, also because the car now has some defects, so that will require some small commitment to the client, but a fair commitment, like you have just mentioned, the 5% minimal deposit.
Okay.
Thank you.
Now, for the clients that want to approach Nedbank with regards to the solution, is there a minimum or a maximum amount that they can borrow to finance their dream vehicle?
Thank you, Natsina. Actually, at Nedbank, we practice what we say it's responsible lending. Yes, a client can get any car of his dreams. At Nedbank, we are trying to drive dreams for our clients, so that is not a problem. But then again, as I'm saying, we do the responsible, with the aspect of the responsible lending. Affordability of the car is actually based on the income of the client.
Okay.
Yeah.
All right. How do I then apply? How do the clients apply? Is the application the same whether I'm a bank or whether I bank with Nedbank or I don't bank with Nedbank? What's the process, the application process?
Application process is easier, not silly. With us, I think it's the same process across a Nedbank client or a Nedbank client. You just bring your payslip. You just bring us your payslip, so we calculate your affordability. Also, we do require that we see your bank statement, especially for people not banking with us. We request that they bring their bank statement so that we do a 360 assessment.
Okay.
Thank you.
What are some of the conditions that a used vehicle must meet to qualify for financing in terms of the lifespan or mileage?
Sorry, it depends on it.
What are some of the conditions that a used vehicle, if I'm not buying a brand new car under this financing solution, yes, what are some of the conditions that it has to meet in terms of, yeah,
okay, no, thank you, Natsu. That one is a simple one. Actually, as a bank, we finance second-hand vehicles up to 3 years old.
Okay.
Yeah, so beyond that we don't. Yeah.
Okay.
Yeah.
And what is the maximum repayment term for new vehicles? Does it affect the monthly installments?
Yes, monthly installments are, yes, it does affect monthly installment, but then in a nutshell, for a second-hand car, the repayment is up to 7 years. It's up to 6 years actually.
Okay.
Yeah.
All right. Now, for the client that wants to buy that wants to approach the bank for such a service, suppose then I do qualify, I bring the contract or my proof of earnings, and then the unfortunate happens, I am laid off at work and then I no longer am able to continue paying for the car. What are the processes thereafter?
Remember, Nutsile, this is an asset. It's self-secured.
Okay.
Yeah, so in that case, the bank engages with the client actually. You might be laid off, but you might find that you will still have some other source of income. So we encourage our clients that they come to the bank to put forward their story, put forward their situation, and we take it from there. Especially in a case like I've just mentioned, some clients you find that they will still have they had smaller other income. In that regard, the bank will try maybe to restructure the facility so that we cannot dispose the car.
Okay.
Yeah.
Khumalo, thank you very much for your time. That was Bongi Nkosi Khumalo, the ABF specialist at Nedbank, and we were discussing all things flexible financing for especially cars. Now, do reach out to Nedbank in case you want to walk away with a new whip. This is Nedbank Business Watch. Stay tuned.
All right, we welcome the Treasury Department from Nedbank Eswatini as we zero in on what markets are looking like today. And of course, just a bit of highlights we are seeing in Forex. There's a bit of some strength on the rand and commodities, strength on the gold, while prices are dipping on oil, and with equities, S&P seems to be doing well, yet the FTSE 100, not so much in England. Let's have Sandiswa Dlamini help us understand these numbers. Ngosi, welcome to the program. It's been a minute. Hope you're doing well.
Good afternoon, Sfiso, and good afternoon to your viewers. As you have rightfully mentioned, the highlights of the market, we are currently seeing a lot of movement in the markets.
Yeah.
I would like to first start with the FX side, where we are seeing a lot of reactions. So the rand is currently strong, and this is mostly at the back of the South African government, or South Africa, having a very successful G20, which positions South Africa as a very strong country and a lucrative investment destination in the continent. We have also seen a few announcements on few developments in the past few days, where we have seen South Africa being improved in their credit rating. So they have improved credit rating. They have also been removed in the grey list, which now means that they are now more lucrative, or they are able to attract more investments, especially foreign investment from European countries or even the US, even though on that other aspects of the US there are still tensions. So this is great news for SA, and they continue to do well. And on another portion, just to highlight for the rand, it's a big opportunity for Swazi industries, South African industries, especially if you are an importer, because now it means that if you are importing from the US or you are importing from other countries, and those transactions are denominated in US dollars, those goods, you are not necessarily, but technically you are getting them at a cheap. So we encourage Swazi clients to take advantage of this opportunity, because it might not last for that long.
Yeah, I think it's important, and thank you for advising our Swazi clients, because when we look at these numbers, we really want to understand what it is really that should it in form to Eswatini, and I think that's important. But, you know, looking at the global markets right now, the currencies to commodities and the equities, I think I want to ask, what is top of mind from Treasury? Just if we consolidate everything, where are you seeing the biggest risks and opportunities?
No, thank you for that question. I think what we have seen is that there's a lot of volatility. So the market is not so stable, especially with a lot of change in policies from the U.S. government and its posturing towards the rest of the world. So there is no certainty in terms of projections from anybody, certainly. But what we've also seen is that Donald Trump in the U.S. have now got into. He announced that he's now chosen the Fed chair for next year, but he's still going to announce that since we know that Jerome Powell's term is ending next year, and this is showing that now there is a bit of influence in markets coming from politics, which is something that we have, like historically, is something that we have tried to prevent from happening. So now we are seeing that that influence coming in, and this guy. So there is a lot of expectation on the new guy because he has put a lot of pressure in terms of this guy have to be aggressive in cutting interest rates in the U.S. So from a politics perspective, he's trying to lower the cost of debt so that when people are taking mortgages, they're taking loans, those products are at a cheap, and to make sure that those interest rates are low in general in the country. So this is also a risk and setting a bad precedence going forward because, as you might know, the government will change. Now Democrats will come in and they will also be pushing for a different agenda. And that's why I think the Fed chair should be independent and the governors certainly should be independent from politics, which is, I think it's a new risk that has come into the arena.
And absolutely. I mean, I think we've all been awake to, for lack of a better term, the friction between Jeremy and Donald Trump. It seems as though they don't have the most amicable relationship. As if, in fact, it's not supposed to be the best relationship. They're not supposed to be friends. Everyone should be doing their job. But it seems as though Trump wants to have his hand and wants to have his control in what is happening there. But, you know, between me and you, do you believe that the next person in the chair will not be influenced by politics? And how can you guys make that a reality?
Thanks for that question, but it's going to be very hard to make sure that the next person is not influenced by politics, especially if the next person is handpicked by Donald Trump.
By Donald Trump, yeah.
So now his policies might be influenced by that. We're still going to see what happens because currently we are projecting a lot of interest rate cuts, especially in SA and Swaziland. We are expecting it might be more in the US. The current projection is an interest rate cut before end of December in the US, which is also going to have a ripple effect in the market.
Yeah.
It's the same in the UK in terms of the interest rate cut expectation, which is why currently we are seeing higher prices of gold.
Yeah.
Because investors are trying to move their funds or prepare for that time when interest rates are lower, that they are holding in a higher yielding instrument. And currently gold is doing very well, so investors are moving towards it.
Yeah, I do want to, go back a little bit to the rand. And, you mentioned we just saw the G20. A lot of things that have been happening really in South Africa because they also hosted Global Citizen. But it's a lot that has been happening there for a positive outlook coming out of, the southern part of Africa. But at what point does currency volatility start to worry you from a treasury risk management point of view?
Yes. So on that perspective, I think there are different sides to, especially for FX, there are different sides. So every side represents a different opportunity. Currently, the FX, the rand is very strong. So this is a big opportunity for importers.
Yeah.
And on the higher end, if the rand is weak, now if you're an exporter, that's an advantage for you. So it's just that different industries have to make sure that they take advantage. Of those opportunities and make sure that they make the most of it.
Yeah, indeed, just right across the board.
Yes, so in terms of the rand, it's currently at 17.0904. It's worth highlighting also that we've seen the rand go to 16 recently, which was a big low in recent times.
Yeah.
We've seen GBP, it's at 22.68. The euro is at 19.92. We've seen the euro dipping below 20 quite often recently, which is also showing the strength of the rand in recent days.
Yeah.
And as you have highlighted, the positivity around South Africa has been heightened recently, and we are seeing the results of that in their currency, and we are also seeing that with the JSE Ultra, which is
interesting movements indeed. And as we get into commodities, of course, we did highlight there's a gold strength and the oil dip, particularly in England. And I want us to get into that, how these two trends affect our revenue outlook as well as our import bill.
So in terms of gold, especially, okay, let me first start with gold. For gold, we have seen recently, especially central banks, they have a high demand for these instruments. This is a global movement where central banks are acquiring a lot of gold. So currently gold is at 4,221. Yesterday it was at 4,100. We saw a spike overnight. Crude is at 65.07. So in terms of crude, maybe this is something to highlight, that yesterday we saw a dip. So the dip came from the fact that the US and Russia are where we were in talks, right, in terms of how to solve the issues around Ukraine. But unfortunately, those talks fell through, and we received news around 1 today that those talks fell through, and there was an announcement by the Russian media that there is no agreement between the two countries. So that's what led to the current spike, which is very unfortunate that there were no agreements between the two countries, which means the tensions or the war is going to still continue on that side. But going back to gold, in terms of gold, it's mainly investors moving towards that instrument because of the lower interest yielding assets in Europe and in the US. Because now what we expect to happen is that the Fed is going to cut interest rates, and the Bank of England is going to cut interest rates. So for investors there, it means that their bonds are going to yield a lot lower than they were. And currently gold is doing very well, so it looks like a best alternative for those investors. And it's December now. We are also going to see traders locking in their profits and then selling off probably the gold. But the volatility around gold is usually not too bad. It's usually stable and contained.
And I think, right now it makes sense why you always call gold a safe haven after everything that you've just said. But when oil prices move sharply, as we are seeing, and as you've explained, how quickly does that impact what you're modeling for inflation, for subsidies or fuel tax revenues?
Yes. So in terms of oil, unfortunately, oil sort of have a economics of its own, in terms of it affects almost everything in the market. So an increase in price of oil might lead to high inflation, because even I would use an example of groceries. The groceries get into the shops because of transport. And so if you increase the price of oil, it will trickle down to almost everything, because it's that much of an important commodity in the market. So currently what we're seeing is that the prices of oil are lower than they used to be, because of, in the Middle East, there's sort of that agreement between Israel and Hamas, which is not perfect, but it's currently working, because there's a bit of stability in that area of the world. And as you know, the Middle East is the biggest producer of oil. So stability in that side of the world is very helpful for the market. And another portion of it is the US, because the US have stockpiles of oil. They reserve oil. Originally, it was meant for war, but now they are able to use those reserves to sort of influence prices or control prices, make sure that they do not move rapidly, or they are not as volatile as they can be. They can sort of increase or reduce supply when they see the need. So that's why the prices of oil are sort of stable in the US, and in recent days they were lower because there were reports that the stockpiles in the US are very high, which means there's a lot of supply of oil.
Yeah, knowing the US, one could argue that that was intentional, that they stockpile not only for but also to control the market. But maybe getting into the equities, S&P 500 is strong and the FTSE 100 is lagging behind. Talk to me about what is causing that divergence.
So in the US, it's unfortunately in recent times it's hard to talk about the S&P 500 without mentioning tech stocks.
Yes.
Unfortunately, we have seen a very sort of the S&P being tech heavy. So
Sure.
movements in tech will eventually influence the movements in the S&P. It's currently up at 6,800. It's 3.70% increase. But this time around, we have also seen Boeing being a biggest contributor. Boeing is up 10.2%, and this is because they have announced, their CFO have announced that they are projecting higher sales of aircrafts next year, which will increase their free cash flow for 2026. That was a big positive. We have also seen Intel up 8.7%, which is at the back of a speculation of a deal between Intel and Apple, which is always a positive. If you have a deal with Apple these days, that's a positive. It's just like Nvidia in the AI space. We have also seen a Bitcoin recovery in the US market. So the significance of Bitcoin in this instance is that investors going for Bitcoin signals that they are now more willing to go for riskier assets, and equities are the first stop in terms of risky assets before you get there. So that shows that that shows the demand and willingness for investors to put their money on equities in the US. In terms of the FTSE 500, the FTSE 100, that dip is mainly coming from the England market or the UK market, in terms of it have seen a very stubborn inflation in recent days, and we have also seen numbers showing a very low consumer confidence in the UK. So I think consumers there are now not spending as much as they used to, and they are being cautious with their funds, and investors as well. So that's why their fund is currently low.
Well, Ngosi, thank you so much for your time. He was zeroing in on the global market movements, and he has really given us insights on what is happening with regards to the global picture that is shifting fast, rather, and indeed has helped us understand. Let's go for a quick ad break. We shall be back shortly.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. You are still watching Nedbank Business Watch, and we've come now to the final minutes of the show. You may recall in one of our business stories this afternoon, we had businesses, whether formal or informal, being encouraged to register on the Citizens Economic Empowerment Registry platform. This is a platform, or a site rather, that has been created by the Citizens Economic Empowerment Council. And to tell us more, we're joined by the face that you really get to see, that is our business journalist, Nelson Ndlangamandla. Good afternoon. Good. How are you doing?
I'm good, Notsile, and good afternoon to the viewer at home.
Glad to have you with us in the studio for the next few minutes, I should say. So perhaps we could take it back a bit. What is the Citizens Economic Empowerment Act, Ndo?
The Citizens Economic Empowerment Act is an act that seeks to give indigenous Swati businesses more opportunities. You know, in the previous years, Swati have been saying that in the big WEGs, most of the companies that get the opportunities are the companies that are not initially from Eswatini. So this is an act that the Minister of Commerce, Industry and Trade came up with to ensure that Emaswati get these opportunities.
Right. Now here we are, there's a registered platform. Who should be registering really? Because we understand the business community, the business landscape is vast. There's your big players and also the upcoming players. But really, when we talk about the platform, who should be registering?
It's mainly the small businesses, the micro small businesses. I think you've highlighted it in the beginning that it is the formal and informal, because this platform is mainly to ensure that the businesses are visible and have access to opportunities. What the ministry and the council is trying to do here is ensure that when there is some sort of help or there is some sort of funding, it goes to all these businesses. They know which businesses to fund and where are those businesses. So that is why they are trying to create a platform where they can go and say, okay, these are the businesses that we should fund at this time, and they are in this sector.
You've touched a bit on how the ministry sees it fit that there's such an institution, well, that is the Citizens Economic Empowerment Act, because a lot of, when it comes to, development works in the country, often foreign companies benefit. But given this platform, I'd like for you to perhaps speak to the business or the small medium entrepreneur out there, why it is important for them to register and be known on the platform.
Fortunately, whenever I do these stories, I usually talk to the business federations. So I talk to the Business Federation of Eswatini on why it is important to be part of this platform. So it's basically simple. The government should know who you are so that the government can be able to channel that support to that business. So I'm sure the ministry has touched on it a number of times that there are informal businesses, but those businesses, they are informal because they don't know what steps to take in order for them to be formal. So here, even if you are informal, you can go and register on this platform to ensure that you are known so that the ministry can assist you whenever you need assistance. So the Citizens Economic Empowerment Council is trying to ensure that every business is known, every business has those particulars on this platform so that they can know how to assist those businesses and how can they assist in terms of funding and everything.
Right. In 30 seconds, is there a deadline for either formal or informal businesses? And also, how has the Business Federation received, this website?
For now, the ministry hasn't stated when the deadline is, especially because they are yet to conduct more sensitization workshops in the different regions. I think the director has stated that they have only done it in the Hoho region, so they are still going to go to all the other regions. So the Business Federation has, your last question, has welcomed this initiative and encouraged businesses to go and register.
Right, fair enough. And Nelson Ndlangamandla, thank you very much for your insight. That was our business reporter, Nelisi Ndlangamandla, sharing insight on the Citizens Economic Empowerment Council that is actually urging businesses, informal and formal, to register on the Citizens Economic Registry or platform. That is, this has been Nedbank Business Watch. Thank you so much for sticking around. Until the next edition, take care.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.